Hello, everybody. Welcome back. Happy Monday to you all. We are here once again, another episode of In the Trenches presented by FOMO. This is episode number 43. And man, we got a go-to guest for you guys today, Colby. Man, you've been tearing up the leaderboard these past couple of days with this position on Prism. Stoked to get to chat with you, man. Really, really glad to have you here.
Yeah, thank you very much, Jason, for having me. Honestly, very excited to chat. I'm really excited to just dive into everything, to be honest. Trading, tech, novel, new on-chain experiments that have been popping up. So yeah, let's dive into it.
Yeah, we were talking before we went live here, and I want to spend quite a bit of time today getting into the nuts and bolts of Uniswap V4 hooks and Prism token and dstable and Spectrum. All of these new technologies that seemingly like popped up out of nowhere. I mean, I know Uniswap V4 hooks have been around for a minute, but you know, I told you, I'm a bit of a tech Luddite, and I'm a little slow to like dig into all the newest tech at all times. So I'm really excited to get to chat with you because it seems like you've got a really good understanding of all this stuff. Before we get into that, though, I do want to spend a little bit of time just getting to know you, man. Like, tell me about how you found trading in your life. What was your first foray into it? Was it in, traditional assets? Was it in crypto? Like, tell me the story.
Yeah, no, for sure. No, so crypto is the first foray for me into trading. I started almost 10 years ago. I was 18 at the time. I was an apprentice, actually, a software apprentice back in Wales, and stumbled upon Ethereum on a podcast. I was deep into the trenches with Java, kind of had a tech background, a bit of a Runescape digital asset kind of, lover because of games in general. Stumbled upon Ethereum, and it was a controversial topic about like the DAO and, the DAO controversy around the ICO. And to be honest, just fell in love with blockchains in general. I think the whole, as I mentioned, the Runescape background really helped with just kind of clicking immediately. Oh, digital assets, it kind of makes perfect sense. Also being a bit of a zoomer at 18. And really dived into it, to be honest. I got into the whole ICO mania, that crazy period of time, stumbled upon a load of interesting projects. I kind of wanted to get involved more. I tried to join a bunch of Telegram groups and meet a bunch of people, and it all took off from there. I ended up going over to Amsterdam. I worked for an NFT ticketing project for 4 years in the space. Okay. With the whole goal of trying to destroy Ticketmaster. That was the ambition.
Yep.
And
I remember those times.
Yeah, exactly. I mean, the thing is, I still believe in it. Like that's the thing. I'm an on-chain dreamer. I genuinely believe this technology will actually disrupt legacy businesses. It just takes time. But to be honest, I've always been a DJ at heart. I've always been someone who really just loves to find new, novel experiences before anyone else get to them, understand what they're doing. That's really actually where my trading background comes from. Like I'm not really a charter or someone who looks at like the fundamentals of a chart. I'm someone who finds an interesting narrative or piece of technology, tries to really understand it before anyone else, gets a position in that thing before anyone else. And if I really, really like it, then I'll actually just, like I'm doing at the moment, try to help the team get it to market in a sense, make people understand these things because, again, they're so novel, right? Like, we're, I guess, fortunate in the space to kind of understand how these things work, perhaps a little bit quicker than other people, but it's the job of, I was a marketeer, so it's kind of my job to get people to have that light bulb moment. So that's how I got into the space, really, yeah.
Okay, talk to me about some, like key trades in your life. Do you have specific things that you maybe struggled with early on and then maybe overcame through particular like key moments?
Yeah, well, early on, there wasn't a struggle in terms of like actually finding assets because during the ICO craze, everything went up. I mean, in both the best way and the worst way. You could literally buy anything, it would go up. The problem was you had absolutely no framework for it, right? You were buying these things, you had no idea what they really did. After 2017, everything came crashing down, and that was my first rude awakening. It was, position sizing. It was understanding where you are in a hype cycle. Like these sorts of frameworks really sort of bit me, in the beginning. But yeah, in terms of like the most interesting or the biggest trades, I mean, it has to be like the AI 2024 base kind of mania. because it was technology, right? First and foremost. I'm not much of a meme person, although I do enjoy a good meme. I just loved, okay, here are teams who are genuinely building really cool tech in AI on chain that anyone can get access to, like democratized access of, funding these things effectively at the ground level. So yeah, like stuff like Virtuals, Luna, Game, like AIXBT, Vader, those types of things I managed to get into very, very, very early on. And, I wouldn't say I played out the trade perfectly, but I managed to capture that interesting upside. And that's really where my sort of VC company, Irora Capital, was founded from, those initial, like just big run-ups. I realized, okay, let's try and formalize this into a company. And yeah, that's how things went. But that period of time was just exceptional. It was just good vibes. Everyone was just discovering new technology. It kind of felt like it was that beginning of actually it felt like crypto kind of the whole AI mania that we're seeing now. It clicked for crypto people way before it clicked for mainstream audiences. So yeah,
seems to be increasingly the case, right?
Yeah, no, very true, very true. I think we are in general as an industry quite early on to things. But yeah, the ICO mania was absolutely crazy. I wouldn't sort of take that back at any moment because it was just such a fundamental formulating period of my life. But in terms of actual, sound strategy, it was 2024 for sure, the basic.
Okay, so you used the funds from the 2024 wins to kind of put together and build up this this company of yours, Irora Cap.
Yes. Yeah.
Why go that route versus just staying independent trader, clicking buttons? What's the difference?
Yeah.
What was the purpose?
That's a great question. Partly because I don't trust myself fully. It's like the thing is when you're just thinking on your own, you're in your own head. It's very difficult to actually have a formulaic strategy. When you form a company, it's kind of in a way forced for you. You need to declare your books. You need to have an accountant. You need to make sure everything is laid out for you. I also have a great business partner, my friend, who's the complete sort of the more logical mind to this duo, so to speak, with Aurora Capital.
Okay.
And we just, in the end, are actually having far better synergy together than sort of separate. I mean, the amount of times there's been a bull and bear market, quote unquote, where I'd run it up and then sort of have poor take profit strategies because I'm a dreamer, a believer. And then this company effectively just formulates that for me. In a sense. So I'm a lot more stringent because I know I need to be stringent because otherwise my accountant at the end of the year is going to kill me, basically.
It's a really aggressive, it's a really aggressive form of like just keeping yourself honest.
Yeah, no, very much so. And actually it's a great reflection period because you have to at the end of every quarter look back. What were my great trades? What were my bad trades? When did I overextend? When should I have taken profit realistically? I mean, even the FOMO account is tied to the company. Like everything trading wise is tied to the company. So I've actually explained FOMO to my accountant. Fun fact.
Let's go.
Yeah. So we'll onboard him. We'll get.
Yeah, I was gonna say. We need to get him on. Yeah. So okay, you started this fund. You're investing, you're essentially taking the route of the trader mindset, right?
Yes.
Nothing has changed about how you're identifying narratives, how you're identifying stuff you want to invest in. The only thing that's changed is kind of the, the fancy box around how you're doing it.
Exactly. Yeah.
And you've recently stumbled on V4 hooks and this new Prism architect. Yeah. I know it's a token, but it's kind of like architecture too. Can we start to break down the bare bones of how all of this works? Maybe you could tell me better, where the first point is. It seems like the first point is the Uniswap V4 hooks. That is what enables all of this other stuff to exist. So maybe break down what Uniswap V4 hooks are and what they enable.
Absolutely. I mean, so I think the first thing to state is, okay, why V4? You know what I mean? So Uniswap basically spent the better half of, I think it's 7 years building the best decentralized exchange /AMM/liquidity pool infrastructure, right? Like you go on there and you want to trade an asset on chain, you're going to get the best price, you're going to get the best slippage, the best execution. I mean, that was their core business. It was, token goes in, token goes out, that's it, and V1 and V2 with this like great trading experience. With V3, they sort of slowly introduced more dials that you can do, right? Different ways you can set liquidity ranges, different fee structures. So they were slowly kind of opening up. And I kind of equate V4 as the app store for swaps and trading, right? Like with the iPhone, with iPad, with whatever, you had all of the things that Apple gave you. And it wasn't until the App Store where this became a massive ecosystem where other people could do really cool things using this underlying logic. And that's what V4 is. And it shocked me. And like how long it's taken to actually take off, right? Because it is, I mean, this is literally all we're doing in a sense, right? We're creating new novel financial primitives. And if this giant ecosystem, which is Uniswap, enables these new primitives, like this is what allows for creativity. This is what allows for that Apple App Store moment. And I think the reason is because they had this whitelist. So they actually launched it last year. They had this whitelist where only like allowed developers and ecosystem projects could actually use these hooks. And then they sort of like just they just launched it out there. But I mean, I'm pretty sure it was around October. So I think that's why, like we had a bit of a doldrums for the last 6 months.
Sure.
And it's taken a light bulb moment. And ironically, that light bulb moment for hooks was the minting of unicorn JPEGs, right? UPEG.
Yeah. So let's talk about this. I have a couple of group chats that have been like buying these things. They were, I missed this trade. Like it's embarrassing how badly I missed this trade, considering like how early some of my friends were to noticing it. What's the story with that token? How does it all work?
Yeah, I mean, basically, it's a little bit like the Pandora and the other kind of projects that came a few years ago, where every token is also an NFT. That NFT logic is, I mean, only enabled because of the hooks. So, I mean, the best way to think of it is, traditionally you would have a swap where a token goes in, token goes out. The logic is fixed, and basically, like V4 allows a developer to come in and change the logic of what happens when you do a swap, basically. So what this developer did with UPEG is when you mint a token, it is basically minting NFT in the background. And every token is tied to the NFT, and it allows for some innovation where you have the unicorn, you have some rarity around it. But it's just seamless in the sense that you swap the token out, you get this underlying asset tied to it.
Okay, so if I own the token, I also own an NFT. Is that
yes,
one for one?
And then exactly, it's 1-to-1. But the idea is that there are fractions. There's fractionalization to it. So if you don't own a full one, you don't own an NFT, and there's some fun games around it.
Okay.
Yeah, it was very similar to Pandora, except that was using a different ERC. This just uses an ERC20 token and makes it much more streamlined because it just needs to use hooks, right, to do the logic. I think because we didn't really explain what a hook is it's kind of like the if this, then that. Have you seen those where it's like, if I do this thing, execute these things after it?
Kind of like a
instead of just a
swap.
Something? Yeah, it's like a decision tree. So if this swap happens, run my custom logic. It's like a browser extension or WordPress, but for a pool, like a swap pool. So that logic was literally, if you swap into this token, mint this NFT represented by it, So that was UniPeg.
Okay,
and I think it got a lot of attention because usually the cutest things, the sort of quirkiest things, are the things that catch on first, right?
Sure.
Yeah.
And so that's kind of the first token that utilized the V4 hooks tech in a way that caught on. Other tokens were perhaps utilizing it, but they hadn't really caught on. So now we have this new token, Prism. How is Prism different from UPEG?
Yeah, it's a good question. So there's no unicorn minting with Prism,
right?
But there are still NFTs. Because of the fact, basically, this developer came around. I discovered this last Thursday. He released a paper on Prism. The idea is, what if every single token that is bought is also a liquidity position, right? Because right now, the way it works is so the liquidity pool and then swapping in and out and holding tokens are kind of separate in the sense that if I want to own a liquidity position, I need to deposit my tokens into the pool to earn yield.
Right. Yeah.
What if we use hooks, that custom logic, so that if you buy the token, you're also getting the liquidity position. It's depositing your token into the liquidity pool and giving you back the liquidity position as an NFT, because Uniswap, basically all of the LP positions are NFTs natively. So it's really seamless, because all of a sudden now all you need to do is buy this token and you're actually receiving LP fees that you can claim constantly streamed to you. And you're actually benefiting from the upside of volatility in people trading in and out of Prism. That was purely the concept around it. Like just really isolated around, okay, how do we, use and manipulate LP positions seamlessly with hooks? And it's grown from there effectively. So maybe, we can go into that and how the ecosystem has grown, but that's Prism in a nutshell.
So I buy a Prism token, my cash goes into the LP.
Yeah.
And then an NFT gets minted that represents the amount of a position that I hold. So basically, like the LP is never being touched in the trading. The LP is just kind of like growing. Is that right?
Yeah.
Right, so
on the Prism side, anyway.
Explain to me the process of the NFT minting. Like, I understand that there is a there's an advantage to holding there's an advantage to holding whole units, right? Having 2 tokens, 3 tokens, 4 tokens. If you have 4.25678 tokens, that 0.25678 does not collect fees. Is that right?
Yeah.
It doesn't. Okay.
Indeed. Yeah. So there are 5,000 whole NFTs, but the problem, like the thing is, and sort of, it's a little bit of a gamification around, how these assets collect on chain, but there's always fractions held in wallets. So in theory, whilst all the LP fees can be shared around the 5,000, in reality, it comes to around 4,300 at the moment. So there's 700 whole Prism that are just simply fractionalized or dust in wallets, basically.
Okay. So what happens if I sell my position?
Yeah, I mean, that's the really cool thing about hooks, right? So when you're selling, it's actually taking the LP out of the pool, burning that LP NFT, and just swapping back and doing the swap logic the reverse way. So then you're just getting ETH, So that's the really nice thing about this. It truly is like the App Store moment is, as you as the user are doing a simple task like buying an asset, and behind the scenes, all the contracts are executing in this really interesting logic that makes for this composable, fun and new on-chain primitives. And that's kind of what Prism, I guess, has pioneered with the LP. And what I really like about it is just realistically, new tokens are incredibly volatile. Like people are selling these things because MicroStrategy are selling 32 Bitcoin. People are, in and out for all kinds of reasons. And so, in a sense, you're benefiting from that just by natively being part of the LP, whilst also thickening the liquidity as well. I mean, it's good to state, but yeah.
Well, if you're selling, then you're pulling out of the LP too, right? So the LP is kind of constantly in flux. How is this LP? How is the constant flux of this LP different from just your standard, all of the tokens that you were trading in 2024, like the base AI season tokens that you were trading?
Yeah, well, I mean, like the way I see it is in the 2024 season, most of the people who made the fees were actually smart participants who understood liquidity pools. They knew, first of all, they knew where to access liquidity pools. I think if you ask the majority of traders, how do you create an LP position? They'll go, I don't know where to access this, being honest.
Or they won't even know what that means.
Yeah, or they'll set the wrong ranges, or they'll set the wrong fee structure. It's still weirdly complex.
Yeah.
So being able to do that just instantaneously without even knowing, like I've spoken to some people, I go, oh, here's the link. Have you checked it out? They're just holding the token because they want to hold the token. They think it's interesting. And I'm like, oh, you have like $50 in fees here immediately, just instantly, and you can claim it straight to your wallet. So that's one. I think the other is, but I kind of cringe on the whole 3-3, the Olympus DAO thing. But in a sense, it does encourage a lot of people to not be constantly trading in and out of the pool, right? Like, that you're always, by holding the token, effectively earning a portion of the liquidity pool. If that makes sense.
How does one go about collecting the fees from the pool for their holdings?
Yeah, it's super easy. Like, you just go onto the Prism site. I think it's the developer's name .limo, their kind of technical URLs. But you just go on, you connect your wallet, you see how much you've claimed in both ETH and Prism. Then you just select all of the NFTs you want to claim under, and then you click claim, and you get your fees.
And that's that.
Yep.
Okay.
That. Yeah.
Interesting. Where does that yield come from? How often does it accrue? How much accrues?
Yeah. I mean, the cool thing is streams in real time, because effectively it's just taking the pool, anytime someone's swapping in and out of the fees, because it's just the Uniswap NFT, they're just basically fetching the data from Uniswap. So you can literally go on there. It's quite addictive, and you just sort of see the number tick up slowly every fee. So that's that. I mean, the fees are obviously from traders, right? Like, it's literally people buying and selling. There's a percent fee. I believe it's 1%. That's kind of standard for most liquidity positions on V3 and V4, 1%
Okay.
And then
so 1% to buy, 1% to sell. Is that right?
Yeah. And then 90% of that goes to, actually, I think it's 100%. I know there is a slight developer fee, but it could be 90-10, actually. I think it's 90% goes to the pool, 10% goes to the dev, and then he uses that to maintain the project.
Okay, got it. So this thing seems like it's just based on your timeline, reading your tweets, and how everything seems like it's moving very quickly. This Prism token launched just a handful of days ago, and we're already talking about dstable, and we're already talking about Spectrum. So
yes.
What is dstable, and how is it different from USDC?
Yeah. So this is where the whole ecosystem really clicked for me. I'll be completely honest. I saw Prism, thought it was very interesting, but as a standalone concept, I wasn't quite sure about how durable the narrative and the sort of the technology could be. But dstable was kind of a light bulb moment for me, because first of all, you have this giant narrative around the Clarity and Genius Act not passing back yield to stablecoin holders, right? So ultimately, anyone interacting on chain isn't actually getting the yield. That's going on to Circle's balance sheet or Hyperliquid if you strike a deal, for example, and the average person holding stables doesn't earn the yield. Now, dstable, basically what it's doing is it's kind of taking the dirty work out of fetching yield. Because what it's doing is, say I'm swapping ETH into dstable, instead of swapping into a pool, there is no real quote unquote pool. There is one, but it's small. What it's actually doing is, again, using hooks, but it's minting the stable coin from the contract the moment that you're buying it from, Uniswap or an AMM. So you're basically taking your ETH, you're swapping it into dstable, it's minting that stable coin for you. But then what it's doing is it's swapping that ETH and it splits it 50-50 into USDC and USDT, so both of them. And then what it's doing in the same literally the same call is it's putting it into Aave, into basically the pools, so the USDC pool and the USDT pool on Aave, collecting that yield and streaming that yield back to you for holding dstable. So as a user, you reduce all the friction. You're buying the dstable, it's a stable coin, it's literally pegged 1-to-1 or 50-50, I suppose, between USDC and USDT. And you're just seeing that yield stream in pretty much on a similar site to the Prism claim, but it's just for dstable. And, the thing is, I know there's a lot of people who go, okay, well, I'm trading a load of tokens. They're very volatile. Why do I really care about 2 to 3%, when I'm at the end of the day buying tokens that are 10, 50, whatever it may be? And to be honest, the way I really see this, and I genuinely think it could take off, is imagine all of the capital trapped in liquidity pools, right? Imagine all of the capital that's paired to a token, say virtual USDC, when actually imagine if it was virtual dstable, and then all of a sudden out of a $5 million pool or $1 million pool, half of that is earning yield that's in Aave. It's bullish for Aave because they're collecting more deposits. It's bullish for the space as a whole because you're kind of using up dead liquidity, so to speak, to earn yield. So it's super composable in the way you use it. And, this is just sort of a guy who had this really cool idea that no one's done, that's all of a sudden created this really efficient, hyper-composable stablecoin called dstable. Yeah.
Interesting. And are the pool for Prism, is it a dstable Prism pool?
Like, yeah, one has been created. It's not the main pool because most people realistically are, well, dstable only got launched, so there's no one really wanting to swap out of dstable into Prism, but it is there for sure. I think that's the thing. It's going to be the bootstrapping of dstable that will, not make or break if it works, because it's always there and it's always, it's a primitive at the end of the day. But really, if it gets TVL, it will be based on how it's used within DeFi, within trading, etc.
How long ago did dstable launch?
Friday.
Oh,
so so Thursday Prism came along. Friday the developer went, well, okay, let's just expand on this and go, okay, from here's a liquidity generating token to here's a yield generating stable coin, kind of using the same concept. And the nice thing is the contracts and the logic are kind of similar. And that's after that we started chatting about what else we can do, right? So yeah, it's the ecosystem's really being built fast around this.
What is the process like for you? The past couple guests that I've had on, one thing that I tend to ask is like, what should traders be doing to like either improve their skill set or to just make headway? Maybe you're not connected to some group chat, but you can do other things to like, gain alpha. And one thing that has been suggested to me a lot lately has been like, hit up devs, like talk to people that are making tech and learn about, like ask them questions, do a little bit of research, hit them up on Twitter, whatever, like you can do that. How important is that to your process? Is that something that you've always kind of done in your trading life, where you just kind of find the novel thing, but then also go and like learn and get to know the people that are creating the novel thing?
Yeah, this is a great question. I mean, I think the first thing, it doesn't even matter what industry you're in, but it's the curiosity, right? It's if you genuinely find passion in the technology, you want to be curious about it. You want to explore all facets of how the technology can be used. So I think that was the thing I've always been very lucky about. Even with RuneScape and digital economies, it was figuring out like kind of the box that was all in. And with blockchains, it was very much the same for me. It was like, once Ethereum came around, okay, what can you do on Ethereum? And I would personally, I think perhaps it's a little bit less relevant now, although maybe it's actually more, like, because basically you would go on to like Dex Screener or Defined. You would look at the newly created token pools and you would literally just scour that. That was the way I started, after the ICOs 2021, 22, 23. That was pretty much the majority of what I was doing. I was just literally logged in, Dex Screener up, see all the interesting stuff, filter out the things by, liquidity, or you'd run like the honeypot.is, and you just go through the contracts. I think, ironically, now that we're having this discussion, I actually think that's becoming a viable path again, because there's just fatigue, right? No one's launching new novel things anymore, or it's felt like the whole weak crypto, soft crypto, right? Where TradFi is going to just take the rails, all the interesting things are just going to fall by the wayside, and we're just going to become the back end of some suited company with a giant, $1 trillion like stock price. So I actually think, in a sense, that is coming back a bit. It's scouring like the chain, Another alpha tip is find interesting developers, definitely, but ones with Milady pictures, because it's something about the Milady NFTs. Honestly, if you could just, you take the contract for the Milady NFTs, you find all addresses tied to it, and then you just find when one of those is deploying a contract. Because I don't know what it really... It's that community just has the most cracked, interesting people who are experimenting with technology. I mean, like the Prism dev, he has a Milady, portrait. So perhaps it's the similar theme, but that's something I found very interesting. But yeah, no, you're right though. Like absolutely, developers. It's the whole Steve Ballmer thing. Developers. Finding people who are not afraid to take risks, really, right? To really innovate is a really useful one. for sure.
Yeah, and honestly, I think taking the risk is, you're used to it. Perhaps you've been doing it for some time. It's part of your kind of whole like business ethos. But like for the average Joe Schmo, taking the risk is reaching out. You know, like take that risk and ask those questions.
Exactly.
The worst thing that could happen is that somebody doesn't respond. The best thing that could happen is maybe you get some sort of insight into something that nobody else really has insight into yet.
100%. And the whole network is your net worth. It's so cliche, but it's so true. Like I have they've become friends over the years, but Telegram groups where people are there, they turn up, they're really interested, they post new novel things. You get to have a great chat, you get to understand, and really it's a community. But over the years, it's been so invaluable, especially when you're getting started, just understanding and talking to people and being curious. It's the best way to dig in.
So one thing that immediately comes to mind for me is, this V4 hook tech is removing a lot of it's removing a lot of the hard stuff that has historically been like alpha in crypto, right? Like you do the thing, like you bridge the wallet and you connect the thing and you wait for 5 days and then you deposit X amount of this token and this token and this token. And then you gain the yield from like doing all these hard things.
Yeah.
What is like now that this technology is kind of like pretty readily available, I imagine that we have to start expecting lots of imaginative ways to utilize it, right? And then if that's the case, then what is the staying power for a token like Prism or a token like UPEG when the technology is easy? All I got to do is buy the token. Maybe I don't know what it's like on the development side, but I would imagine that it's got to be multiple steps easier to develop these tokens too, right? Like, talk to me about the development side and talk to me about like what your outlook is for these sorts of tokens and how that might change the value proposition of any of those, like any of the individual tokens right now that are popping off.
Yeah. This is such a great question because indeed it's true. At the end of the day, technology is getting easier to do, whether it's through AI, agentic coding, whether it's through indeed making things more accessible to do with hooks. So I think it is, again, like always being a step ahead, right? I think what's really cool about the Prism dev is it wasn't just, oh, I'm going to launch Prism. It was, okay, that's my first concept. Let's build on it, right? Let's try dstable. And then now it's like Spectrum. So I think you have to continue to push things forward, be at the front of the fold. I think that's very true. I think what gives Prism staying power, obviously first mover advantage helps. I think, in a way, it's also, I don't know, building an ecosystem that's not just one layer, but several layers that all combine together, right? Because that's the thing with Prism, that gets fees from dstable. Dstable is this really cool way of just very seamlessly getting yield from your stablecoin. With Spectrum, and I think we'll touch upon it later, that ecosystem also feeds back into Prism. Everything becomes a bit of a self-perpetual flywheel. I'm going to use the flywheel word. And the
risky,
thing is, like,
risky, maybe.
Yeah, it's risky. But also you can use dstable within the indexes. So in a way, like this next piece complements dstable and complements its bootstrapping phase. So I think finding ways to tie everything together is always a good way of ensuring you have staying power. But I will agree, you know what I mean? Like many other things could pop up, many other things could do innovative things. I don't think it's a bad thing. I think it's a competition, it's a free markets thing. And if anything, I welcome it. Like I really want more experimentation. I'm really hoping Hooks becomes the App Store moment for on-chain experimentation in perfect time. Like it's literally perfectly timed, isn't it? Everyone's checked out. Everyone's like, the TradFi suits have won. Strong crypto's dead. Weak crypto's here. Wouldn't it be just lovely? Wouldn't it be beautiful for some new technology to come up for devs? I mean, the Prism dev literally said to me, he's been a dev since 2015. He created a cool Ethereum wallet back in the days, created a few things during 2021, and then literally checked out because nothing interested him until he saw V4 hooks. And that was the thing that actually really made him want to come back and build. So if that's one developer, I can only imagine how many others are sort of either seeing this or already starting to build cool, novel things. And because I don't know if you've seen, like, there was like a really big if this, then that meta, that literally the IFTT app. And some of the things that people were chaining together was just diabolical. It's like, oh, if you do this thing, 100 different things execute. So I can't imagine what on-chain primitive we may see when people start to really put all these things together. And by the way, the cool thing is, obviously, because every smart contract has functions, you could start to just implement dstable into that stack, right? So whereas one thing has become one thing is the thing, now all of a sudden it's just plugged into a layer of 10 different things, if that makes sense.
Interesting. Who's this dev?
I believe he's Anon, much like the good old Satoshi Nakamoto. It's literally someone I've been speaking to on X. Yeah, they seem really curious, passionate. An ETH OG mentioned that they're doing it for the love of the tech, doing it for the innovation. I think the reason Prism has also done really well is because, I mean, realistically, there was no side wallets. There was no, buying up a ton of supply and hoping this innovative thing gets picked up and then dumping it all. The reason why it's doing so well is because it was just a guy with a cool idea that wasn't really caring about the financial side. Sure, maybe that's nice, but it was actually just, I want to experiment. Yeah.
How do you, I mean, you are a professional capital allocator, I would say. Like,
you're not, when you say it like that.
You're not throwing around $1,000 here and there. I could see your wallet. Like, you got big money on the line. How do you go about assessing the legitimacy of a random anonymous account that you're DMing with on Twitter?
That's a good one. Yeah. I mean, so my business partner, he's kind of a good GitHub sleuth. So finding a GitHub, going through a GitHub, especially passing it through Claude again and again and again nowadays is a pretty good baseline. This is one of those ones I think we mentioned before we came on air, but it's also the tingly feeling.
Sure.
I don't know how exactly that, it just comes about over many years of like, this is really novel. I haven't seen this before. I think it could really catch on. I think a big thing is also kind of trying to establish how many participants are aligned around this thing. Like you can get like if there's a concept, yet it's sort of a PvP or like, one group of people will be vehemently against this thing, a lot harder to take off. When it's something that aligns all participants, developers, influencers, traders, retail folk, a lot quicker to take off because everyone wants to see these things win. And that's also the spectrum thesis as well. Yeah, I hope was that a good enough answer? Maybe I missed a little bit of that question, but
I mean, really kind of any answer is good enough. There isn't a right or wrong answer. Yeah. It's just, I talk to a lot of traders in the FOMO Discord, and you're sometimes just as likely to get scammed by an Anon on the internet as you are to, like an Anon on the internet gives you the best alpha in the world, right? Like
True.
You just,
and that's part of the parcel, right? That's part of the parcel. You have to bake it in as, okay, I'm going to get rugged on X%. I'm going to maybe lose money on a few things. It's all comes out in the wash, I think really it's also positioning and I'm lucky the money I have on FOMO, it's not obviously the full account.
Sure.
I'm able, because of other cycles and getting into things, that I'm able to put decent money on the line when I really feel passionate about something. And I always just try to frame it as, if I lose this money, at least I tried to back something cool. I tried to back something experimental. And yeah.
Yeah, can we talk? I want to dig into Spectrum, but before we do, I want to talk a little bit more about trading because you just brought it up.
Yep, absolutely.
How are you thinking about sizing into, I mean, this sounds like a very conviction. If the token isn't super conviction for you, which it does sound like it is, the concept, the novelty of this whole idea is like the really sticky piece for you. How do you think about allocating? Are you thinking about like token supply? Are you thinking about a percentage of your port? What's your process there?
Yeah, it could be mixed, to be honest. So like if there's something that seems interesting, but I'm not immediately bells and whistles going off, this is incredible. I like the Stanley Druckenmiller approach. You chuck a couple of a small amount in, so it's just on your radar. I always feel like the best way is literally just to have some skin in the game. Then all of a sudden there's a little just thread in your brain that just ties to it, checks their X account every so often. So I like that rule. Even if it's $500, $100, whatever, the port size is. In terms of sizing, if it's something I really, 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 really like, I definitely try to buy up a fair percentage. I think, especially if it's a new launch, I always see it as I can make sure this does not touch the market in a long, long time. You know what I mean? Okay. I can actually develop a strategy around this, whether it's, after a period of price discovery, I can sell into the liquidity pool with a liquidity range, or I can OTC this to someone I genuinely think was also interested in it. I try to see it as kind of the supply that I have can hopefully bring other people on board who also genuinely believe in this thing, rather than I'm just going to sell it straight back into the market and so forth. Granted, like it can get a bit larger than I expect, right? Like, especially on FOMO, that's the new unique challenge of investing is it's out in the open, and sure. the way that you do your buying and selling is being seen by people and it's influencing people, quote unquote. So I really try and take a methodical approach. Like my goal with the Prism on my FOMO wallet is to literally, ideally, never sell a bit on the open market, like via a sell button. It's here's a liquidity range in this, range, or I'm going to OTC to someone that I really think cares about it. So there's that with things that I really care about. And then to be honest, like we try and we have like we've divvied our portfolio up into other portfolios. So we call this the hero portfolio. Nice. The hero portfolio is the make or break, the big, Z-score, the Sharpe ratio that's higher than anything else.
Sure.
And in that, it's money we're willing to lose, but we're also willing to go bigger than our typical allocation, whether it's 5%, 10%, whatever it may be. Okay. But in core concepts, it's the whole, like, keep everything like a nest egg and just guard it, in a sense. For other portfolios, like with DeFi, it's like 1% to 5%. And we have like a kind of strict, a quarterly review of everything. What's nice is like a lot of metrics on chain, right? You can track everything. You can now with Claude build tools that are literally, when a giant loan gets taken on Maple, because they literally had this. I think this is really cool. December 23rd, Maple Finance, they're a sort of on-chain lending for institutions. They had like a half a billion loan taken out, and it was during Christmas. No one detected that for like 7 days. And it was like a 1/3 of the size of the book. And then the token went 20% up like after Christmas, So you had literally ages to build a Claude bot, to monitor Dune dashboards, to figure out this alpha. And I think the agentic, analytic combination is there's so much alpha there for people who really want to dig into it.
Interesting. So, yeah. What about the opposite side of this whole idea? What has to happen for you to know that you're wrong?
Yeah.
Do you have often? Right. Exactly. How do you know? How do you know?
Well, usually I round trip something completely to zero. I mean, that's usually how I know. My accountant says, "What happened to this thing? It was valued at this, and now it's valued at that." And I'm like, "Yeah, well, I believed in it a little bit too strongly, apparently." How do you know? I mean, like there's the sort of hard knowing of if you have literally set rules. Like in some senses, I'll hold a token and then I'll have some. Like, okay, there's a new project or a new release that's happening for this project. I need to feel like it's getting some sense of traction over a week, over a month. There's that kind of thing, like the hard rules, And then there's the soft rules of, it can be attention, like that's really the annoying thing is there's only finite liquidity in this whole space. I mean, sometimes I'm just banging my head against the wall with a lot of these DeFi protocols because they feel so cheap. It's like, am I wrong? Is the market wrong? Is it just we're so nascent? So sometimes it's the soft thing of can you tell that this thing is a little bit less shiny today than it was yesterday? Or less people talking about it? Is it less core of a bag on people's FOMO? That kind of stuff. Yeah, it's such a hard one to answer truthfully because it's so token dependent. It's so project dependent. But yeah, I mean, to be honest, it's usually just been I've held it for too long. I've round tripped it. I didn't really have a sale plan. Sometimes it's fun. Sometimes it's fun. Just let's see how far this thing can go. You know, I genuinely believe in it. But in truth, I think I'm wrong when I haven't set more of a stringent. I'll at least take my initials on this thing at XYZ, you know, and I'll check the project for, you know, new updates, whatever. But yeah.
Do you have that idea in mind for Prism?
As I said, I mean, the thing is, I genuinely believe that the primitive being built, particularly Spectrum with index tokens, can actually change the industry. That's maybe a big hope, but and the thing is, like, what I love about Prism is all the yield from all of these things flows back to Prism holders. So in a sense, it's almost like, how much should I be selling when, if this can capture a large enough TAM, the whole yield will pay for itself? I mean, just from the volatility of Prism, by the way, I think I've earned like 3% of my entire position just since Friday, just in trading volume.
That's not nothing.
It's not nothing, and that's just from Prism. So yeah, look, like the way I see it is, it's stages. It's right now, if I can OTC a small amount to people who really want to get in and they really believe in this thing, I'll do it. Small amounts, because I believe in, like, why would I part with my assets right now? Then I think it's liquidity ranges. I'm hoping 50 to 100 million for Prism plus. That's kind of the goal. And then the nice thing is, it all comes down to like seeing the on-chain activity, you know, seeing how much Prism gets burnt from the Spectrum, seeing how much yield the dstable can pick up, seeing how much fees from the volatility the Prism can. I'll probably put a Claude analytics dashboard together to track all of this, to be honest, because it's kind of easy. Actually, we're building a Prism beat, like, so it's just a community vibe coded dashboard that just shows all of the different activity happening in real time.
Interesting.
Yeah. So yeah, hope that answers it. High hopes, basically is the answer.
So we've talked a bit about the tokens that exist, and we have not talked yet about the tokens that don't exist yet, that are forthcoming. The Spectrum idea is one that I think traditional traders and anybody who's like has a 401k can understand. But maybe you can talk us through what is Spectrum and why is it important to this whole thesis?
Yeah, exactly. Yeah. So Spectrum isn't a token itself, but it's a launchpad and an ecosystem around index tokens. So originally the developer had an idea of, you know, I feel like a lot of developers and a lot of ecosystem have this idea of, I'll build a launchpad, you know, let's let people make their own tokens. But I'm always so skeptical on new launchpads, because it's like, I feel like we have enough tokens. Like, let's focus on the tokens that actually have a purpose for being there, rather than just new tokens that are just off of the fly. So we created a launchpad of existing tokens, index tokens. And this, I think, most importantly to stress, was not possible to do seamlessly on-chain without Uni V4 hooks. I feel like I'm a Uniswap brand ambassador at this moment in time, but no, like, I mean, realistically, many people have tried index tokens before and index platforms, but it's just so, you know, it's just, you go on a front end and you can only trade them on that front end. And then they have a disallocation to the NAV of the assets under them. Nothing has worked seamlessly out of the box in trading environments that we already use. If you're on Telegram and you want to get immediate exposure to the base AI ecosystem, you should be able to just click 1 ETH on, you know, I don't know what the Zoomers use these days, Photon maybe, and get access immediately to everything underlying. So this is what Spectrum is in a nutshell. It allows anyone to create indexes of many different tokens. They enter all of the liquidity pools of the tokens they want. You can choose all of the weightings of each token within that index, and then it mints this or creates this contract of a new index token. And where the innovation, and what I absolutely love about this, is that index token, it's not like, you know, a token that goes up in value by people buying and selling the token. You know, it's not tied to its own value. It doesn't even have a liquidity pool. So charts will get broken with these index tokens in the beginning because they are so interestingly novel. It's literally the price is actually computed from all of the asset values divided by their weighted NAV. So I'm creating a base index, right? And it'll have Venice and Banker and Pod and, you know, I'm trying to really capture high caps, mid caps, low caps, the whole spread weighted by security, you know? So Venice has 40%, Banker has 20%. And the cool thing about this is buying that token, it's not like a rush with liquidity in and out. It's just you buy the token, it buys all of the assets in that single swap for you behind the scenes, and you hold that token, and it literally has all of those assets on the smart contract and just computes the price of that token by all of the asset prices, if that makes sense.
Okay, interesting.
So, yeah.
And okay, so the first question I have is, these tokens, you said they're immutable, right? So like if I want to make if I want to make one of these tokens, I select the tokens that I want it to represent. I select the distribution and I press go, and it's locked. It is not changing ever, right?
No, not in V1 anyway. Absolutely. Yeah.
Okay, so as a guy who has like a bit of a traditional finance background, and I'm used to ETFs, and I'm used to the lowest common denominator in the ETF gets booted for the highest common denominator that's in the group that isn't in the ETF yet, right? Like the whole reason why ETFs go up and to the right over time is because they're constantly filtering out the worst performing company and adding the next best performing company.
Yeah.
What is the value prop for a token like this that can't be changed, where I have to now, if I want to change the allocation, or I want to remove a token or add a token, now I got to create a whole new token to represent that new allocation?
Yeah. No, I mean, indeed. Like, so the reason we weighed this up, particularly for the V1, is because we think that the trade-offs of having an immutable token outweigh the trade-offs of making it edible, but then making every single person reliant on the index creator. Because once you have that index token, you're reliant, you know, on the assets that are within that basket. If one of those was immediately swapped out for a tiny, you know, market cap token, you have obviously the abuse properties there, but also imagine the chaos of $5 million of whatever it may be, Venice, instantly being swapped into a tiny market cap that the creator has sort of abused and griefed.
Okay.
So that's the trade-off, right? Like, ultimately, that's why immutability is nice, because you have the assurance as someone buying that token, these things will never change their weights, right? I like to think of it as a directional bet, a directional snapshot, right? Here's the base AI season right now. How often, if you're being honest, have you had a list of 10 different things, but you've rotated from one to the other? You know what I mean? And then that thing is just absolutely ripped and done the best out of the basket.
It's the worst.
It's the worst. And I like this as a snapshot in time of an index, where the nice thing is, if you want to create a better index, you can build a better index token, like better, quote unquote, you know?
Sure.
If someone swaps out of that, sure, you are getting the underlying slight inefficiency of their selling off that only to buy it again. But you're not having the rush of like everyone exiting the liquidity pool of the index token, because there is no liquidity pool of the index token. It's just the NAV assets.
I got it.
You know, so that's the immediate risk. There's no, oh, you know, this one just immediately goes to zero, because all of the underlying assets would have to go to zero. So I see it as it's a holding belief snapshot system, where if you weight this thing correctly, you get the heavy hitters, or at least this is the way I'm doing this index. You get the heavy hitters that should continue to just outperform. Venice, Banker. I think these things, they're very core to the ecosystem. Venice has undeniable product market fit, 3 million subscribers, like almost 250 million in ARR that, by the way, the market doesn't seem to be fully believing in, but we'll see. And then Banker, right? Basically any project on base launches on Banker. So you weight this thing so the heavy hitters, the big things, are weighted appropriately. And then I'm going to steal Eric Balkunas from Bloomberg. This is the on-chain Zoomer hot sauce, right? Like Bitcoin is the hot sauce for pensioner or retiree, where they put 1 to 2% just to juice the gains. Like you can have an index where you have this like snapshot of 10 interesting projects, all at 1 to 2% of the index, and they are your hot sauce. They are your, I'll continue to chug along to invest in the base ecosystem. And if one of these things absolutely rips, I benefit from the upside. And if one of them goes to zero, it doesn't matter because the whole index is ultimately recovering from the performance of everything else. That's the way I like to see it, you know. And the thing is, like, the reason why I'm so excited about this is, again, we touched upon the fact that there is a limited amount of liquidity in the space. This is a belief mechanism where you can get behind the whole space, or like the large majority of honest developers. You basically invest in this one thing and everything gets a swell of liquidity within that, you know, ecosystem. You can start supporting the developers who perhaps are really good at developing interesting things but suck at marketing, because you have this, you know, broader exposure of passive flows of people believing in a narrative. And like, if you think about it, like the traditional person, they read a newspaper, they see, oh wow, all of those AI companies, they really need that memory. You know, they're not going onto the quarterly reports of Micron and going, oh my God, you know, Micron's really been ripping it. They just see memory, they type memory into their little, you know, whatever they're using, and they just hit the buy button, you know? And I think that's what crypto needs. This is the base AI index. It's vetted. There's good developers in there. You have nice weighting. You've got tiny little projects that could really do well. You got your big ones that, you know, you're going to hold most of your money in, and you just buy the passive index. And you don't, you know, it doesn't need to be all of your portfolio, but it's supportive of the whole ecosystem. And going back to aligning incentives, I had the brainwave with Spectrum. It was like, I don't think there's a single non-aligned participant with this thing, which is why I like it, because developers, they love it. I've spoken to all of the teams that I'm thinking of putting into this index. Of course they want to support it. They're too busy to do marketing. You know, they're building interesting projects. Sure. This thing helps them with marketing. So developers, it aligns incentives around. Influencers and KOLs. Well, how many people shill like 5 bags, but they're all doing it at different times, you know? And you're kind of rotating between them because this one just had a new interesting release, but this one, oh, they haven't done anything in a week. And now all of a sudden an influencer can create their own index where it's like, these are the things I genuinely believe in right now. Buy the one thing, you know, do it on Uniswap, do it wherever. I've weighted it the way that I'm the most bullish on these things. So yeah, influence. And they also get a creator fee, by the way. So out of the 1% fee, 30% goes to creators, 60% to the pool, 10% to buying a burning Prism.
Is that creator fee just TAM?
Yeah. Well, no, it's swap fees. So it's volume,
fees.
Really.
Okay.
Yeah, that's the thing. There's no like skim off the top of the TAM. It's just swapping in and out. Basically, instead of LPs and LPs getting those swap fees, it's just going to everyone, right? Like oh yeah, we didn't even touch upon this. I can't believe. But holding that index token is a liquidity position, right? Technically. It's not an LP because there is no LP, but you're getting the fees from holding it. So 60% is just literally to people who currently hold the index token. 30% to the creator, so really nice for influencers and KOLs and projects and whoever it may be. And then 10% to Prism, which is why I really think this could be very interesting and bullish for Prism as a whole. Yeah, and then retail get to slam easy. Oh, nice. You know, you can shill it to your grandma. Oh, look at this. Onchain has this base. You know, base has a interesting AI ecosystem. What do I buy? Before it was like, oh, these kind of things, but now it's just base AI. You know.
So let's just do a hypothetical, right? You create a index token, and Ansem creates an index token, and my last guest on the show, Tokani, creates an index token. And let's say all of y'all's index tokens have the exact same assets, the exact same distribution. Is there any reason why I should be buying one over the other? Or are they all resulting in the exact same gains or losses for me?
Yeah, I mean, that's the thing. Ultimately, I mean, based on the weightings, obviously, but if they were all identical, it would be the exact same gains or losses for you. It's more of just, I guess, it's the belief system again, right? Like if you believe in Ansem's, you know, like the way he's creating his theses, then maybe you want to buy that at the snapshot. But I think really they're all distribution and funnels for the larger ecosystem as a whole, ultimately. At least that's the hope. Yeah. And, there is an argument to be said, could you make them in the future, non-immutable? I'd like to at least see what the market reacts to of new index tokens that people feel are better than the other ones. Because in a sense, like, it's not just immediately like everyone's going to go, oh, this thing sucks, I'm going to immediately go on into this new index. It's probably going to be like, I'm invested in the index, is doing well, but I don't really think that these 2 or 3 things are that beneficial in the long run. So either I'm going to build my own, or I'm just going to find one that does have these other assets in them. I think it's more of like something you're reviewing on a quarterly or a monthly basis, rather than the sort of attention ADHD sort of the TikTok-esque of I'm going to change every single day, and swap between a bunch of different assets.
What types of tokens can be in these? Is it only like ETH mainnet or layer 2s, or can I mix and match? Throw some Sol meme tokens and throw some base AI and some whatever.
Yeah. So the way it'll work, at least in the beginning, probably for the foreseeable, is you have your ETH, indexes, you have your base indexes. Unfortunately, Solana, whole different infrastructure. I don't think they have any hook esque thing. I know there were a few little things with the SPL tokens, but no, this will be base and Ethereum only. Aerodrome is unfortunately off the table because I'm not sure what their hook infrastructure is like, but it's not one-to-one with Uniswap. But luckily, Uniswap is like 90% of the pools. As much as I am a fan of Aerodrome, like realistically, you can cover the majority of base with this. I've experimented today, and then it covers V2, V3, V4 pools. There's one thing you can't do, and I think this is good for people to know. So it's dynamic liquidity pools. Unfortunately, Uniswap doesn't allow hooks to be used with that. So that does have some conflict with banker launched tokens. I'm going to actually try and reach out to the banker team, to be honest, to see if there's some way to have a fixed fee liquidity pool in the event that these index tokens do take off, But yeah, that's the nutshell. ETH base. Nothing cross-chain between the two. You can't have ETH and base in the same one. Maybe. So there's the cross-chain communication interop is still a bit. It adds some vulnerabilities. So, yeah.
I mean, if the rate at which this is developing is any indication, it seems like maybe cross compatibility, like you just spoke about, might come quicker than we realize.
Maybe.
What is the aside from perhaps generating fee revenue? Like, what is the upside, or what is the reason for somebody wanting to make one of these tokens and like promote this token that they made, or these sets of index tokens that they've made?
Yeah. So outside of the creator fee, I think it's generally, I think it's generally around aligning around a narrative or an ecosystem. I think that's where you would want to. To be honest, I don't think the majority of people should be creating index tokens, for what it's worth. I have no idea about the rate of how many will be created. I mean, never say never. You know what I mean? People on chain, it could be crazy, but.
Yeah.
I mean, in an ideal world, I would like to think of it as it'll be people who really are deep dived into an ecosystem that it's kind of like offloading brain capacity in a sense, right? It's instead of me having to research all of these different things, I genuinely believe this person knows way more about the banker ecosystem or the virtual ecosystem than me.
Right.
I'm going to, and I think it's a lot more elegant for them, even because I even think they could legitimately say, oh, hey, I had this index. These 1 or 2 things I weren't too happy about, I've created this new index. Swap at your own leisure. It's not like there's, a liquidity pool. You can just hop in, hop out, and it'll just swap these 2 things for you, So yeah, I think influencers, KOLs, ecosystems, chains. Yeah. I mean, in a sense,
who
like
want to
deploy with
ETFs. People who want to manage traditional ETFs in the future.
Exactly. I mean, like take Deployer, OX Deployer from Banker. He's kind of unofficially doing it in a sense with buying and supporting projects, right? You'll see him on an X comment, buy $5,000 of this project. Now it could literally be like, I've got this index that's, I mean, you could even have like May 2026 launched index, May 20, you know what I mean? And it's like cohorts and stuff. I don't know, but I think, like, yes, immutability can be a limitation, but I think it is also something that encourages efficient markets with new index creation, and also, yeah, gives a sort of belief snapshot window in a sense.
I think also there's just like it needs a success story, right? Like you need one person to develop some sort of index that just totally knocks it out of the park. A bunch of people buy that token, they make a bunch of creator fees, and there you go. You have a success story, and you have like a proof of work or whatever. You have proof that the thing works, that it can be done, and then you have a bunch of people trying to kind of replicate the same idea, maybe in different spaces or whatever.
Yeah, exactly. And I think it's important to stress as well, it's not the end of the world with an index if something goes to zero, if one of those assets goes to zero. That's also the beautiful thing. Like when you're constantly concentrated on one token or swapping between tokens, everything's life or death, right? I think the beauty of an index is, should it be put together properly, you can hold it from a snapshot in time, because on the net whole, if it's well constructed, you will, one thing will die, four things will do well, three things will do, mediocre, but on the net whole, you're up, like, on the positive. So yeah.
Nice. We've kind of almost gone over time here, so I don't want to keep you much longer. I do want to ask a couple like FOMO related questions though to close things out. Yeah. First thing is, you have developed a bit of a following on FOMO now. What is the process of being like in your shoes? Like we've talked already, you kind of more on the professional side of things. You have a proper money management, a fund, proper business here. What is your thinking around, like, how are you using FOMO, and what is your thinking around holding your, at least a decent chunk of your positions in a public way, speaking to your followers, using the thesis and all that sort of stuff? Why is that important to you?
Yeah, for sure. I mean, it's evolved over time. I mean, obviously in the beginning, it was just, I'm going to jump on and pretty much do the exact same strategy on a public wallet as in a private wallet. And over time, it's almost been my own belief vehicle, right? In the sense of just flagging, oh my God, I'm really excited about these things. Before it was, you'd communicate in the Telegram group and I'd really try to like, no, but for real, I really think this one's interesting. Now, all of a sudden, because of the timeline, I love FOMO, by the way, like because of the timeline, people, they see your thesis, they see how often you're buying something, how how early you got into the project. So yeah, it's kind of morphed into being our company's way of signaling basically new innovative, like we don't really buy large cap, mid caps. That's all done elsewhere in different portfolios. This for us is the innovative hero experimentation portfolio, where if we find something really, really cool, novel, that's where it's going to be. It's going to be on FOMO, and everyone's going to see that we think that this actually could change the space, and be a little bit of the dreamer ideologue on FOMO. And then that has complexities, right? As we mentioned, if it does become a big position, then you all of a sudden do have the optics of, well, you don't want to be just dumping it all in one go.
Yeah, you have a responsibility.
You have a responsibility. Yeah, because I don't like the whole idea of being an influencer whatsoever. I don't like spotlights and stuff like that. I enjoy pushing like the project into the limelight. I don't like to be in the limelight. And all of a sudden with FOMO, you sort of do have that responsibility of, people do trust your word. They do trust your judgment on stuff. And it does suck when you're wrong, because I have had a few people go, oh, why did you sell out of this thing? So yeah, exactly. So, there is that side of it. I think the hardest thing is that for a lot of the things I'm buying, I have to now do more diligence than I did before, because of the fact other people will buy after me. Before it was like, oh, wow, this is cool, but it could literally go to zero in 5 seconds, And now it's I want to do a bit more diligence, because as soon as I put it on there, people are going to kind of know about it. But that's not a bad thing. That's not a bad thing. It's evolved my own, capability to do research quicker, to use Claude and help me build a mental model. FOMO, I think, has sped up the discovery of innovative things. I think for developers, if I was a developer, I would be leveraging FOMO massively to get mindshare, to build a community. I think a lot of developers don't do that. I would strongly encourage them to do it if they want a core community. Because also it keeps people more accountable. You do see the people who buy into something and then sell out of it immediately, and as a developer, you can keep a much better mental model of, oh, well, for my next project, I'm trusting these people. I'm not trusting these people.
Interesting.
Yeah. So I hope that, answers that one.
What is your favorite way to use FOMO?
Good one. Yeah, I mean, no, I've kind of mentioned it, right? Like, once I understood Prism, like dstable, like, because you can see it on my FOMO. I will be transparent about it. I found dstable.
You're like,
bought it.
Yeah,
no, it was worse than that. I bought it. I then woke up the next day. I really thought about it. I was like, I just think it's too standalone. So I sold it. I literally sold like my initial position. And then I came off a call with someone on Friday, and someone in my group sent me, this dstable thesis. Read the dstable thesis. And then because I had found Prism, like it all clicked. And then you can see on FOMO literally like just hammering. It's like the whole Danny DeVito, and then I started blasting, it's like, just hit the buy button on FOMO because I understood it. It made sense, complete sense. So that's FOMO for me. It's literally my FOMO portfolio, as in when I am FOMOing into something cool. Yeah.
Well, in this case, I mean, FOMO, you may not know this. FOMO actually stands for fearless of missing out, not fear.
Yeah. That's
so maybe in this case, it sounds like you are fearless of missing out in this case. Like, you have a very deep conviction. You're trusting your instincts on this one, and you're going for it.
Yeah.
Do you have favorite follows on FOMO? Any traders on there that are like you pay really close attention to?
That's a good question. I should really bring up my my list, to be honest, because there's quite a few. So it used to, for me, it used to be like some of the meme traders, honestly, because that's just exotic world to me,
Yeah.
Let's see. Small intern. I was following a lot. Fibs, what a guy! Like with Unk, I really liked the ability for him to build a community around that. I think that was incredible. Soul Crow, the Run It Back, Kian, Squid, like Squid and the MetaDAO ecosystem. He is, in my opinion, legendary DD on some of the due diligence on some of those ecosystem assets.
Awesome.
So yeah, I think that's my call out, to be honest.
Okay, right on. Well, man, Colby, this has been such a blast. I feel like I am a couple percent smarter now on this whole topic. I'm still probably gonna probably be pinging you in DMs every once in a while, going like,
please do. This work? Yeah.
I'm excited to see how this all kind of plays out. If it ends up that index tokens become like the next wave, we got to have you back on to kind of talk about, the progression that's been made there, and please just like keep us up to date with what you're seeing. I know that I speak for myself here, but I think I'm probably speaking for some other folks, like people who post legit thesis and actually like try to provide some real information, not just like shit posting. There's a time and a place for shit posting, and I love that too. But like,
we all do
when I can go on the FOMO leaderboard and I can see you holding this token, and I can get like the up to date of what you're thinking about it at any given time. It's just so helpful for me as somebody who's still trying to figure out even what it all means. So I'm selfishly encouraging you to continue sharing your wisdom about what you're identifying, what you're figuring out as you go, and thank you for doing so. Thank you for doing that on FOMO.
Oh no, it's a pleasure. Yeah, it will always remain my excitement portfolio. So if you want to know what I'm excited about right now, just jump onto my FOMO. And absolutely, we'll stay in touch. I'm sure I'll be pinging you with more exciting innovation, hopefully, especially with Uni V4 hook season, summer. I don't know what we're calling it already, but yeah, it's a good time to be on FOMO and Onchain.
The excitement portfolio. I love that. That's what you call it. That's like That's apt. That works really well.
Oh, thanks.
All right, Colby. Well, again, man, thank you so much for coming on. We really, really appreciate it. If you want to follow Colby on FOMO, he is at Colby. Very simple, very easy. That I feel like that's going to be a really valuable username on FOMO in a couple of years when there's.
They just need to be more Colby with it. That's what we're gonna do. Just crank them out, and then all of a sudden, I'll be selling that hashtag that came into the
never
center.
sell. Never sell.
Yeah.
All right.
No.
We will be back. That's it for today's episode. We will be back. We got 2 more guests this week. We've got Bruce, Degen to Disciple, on Wednesday. Famously turned. I think
that's who I should have called out. Yeah, Bruce.
I think he went like $760 to 100K in like 63 days, which is just insane. And then we've got Taiki Maeda on Thursday. He's going to be a bit shorter of an episode because he's he's a in demand fellow. But it's going to be great. So Colby, if you're around, please tune in. And everybody who tuned in today, thank you so much for being with us. We really, really appreciate it. And we'll see you again on Wednesday.
See you.
See you, buddy.